Interest rates are coming down, inventory is going up, and sales data is also going downward. There's a lot to talk about today. We have the May data for Greater Vancouver and then specifically Vancouver East and Vancouver West so that you can make your decisions whether you're looking to buy, sell, or invest around Vancouver. There's a lot of current events that are shaping the real estate industry with the recent rate announcement from the Bank of Canada on Wednesday. How is this really going to affect the market? Is it going to inject a boost of buyers, or are buyers still going to stay on the sidelines? So what we can do right now is go over this real-time data so you can stay informed, and then we can follow through with what some of these current events are going to do. But we know right now for the attached market, and this is what this is for, condos and townhomes, you are still in a very strong competitive marketplace, both in seller market conditions as opposed to the detached market where it's sitting in balanced market conditions across Greater Vancouver. So we're going to start with Greater Vancouver, run some overall numbers on the macro level, and then head to the micro level and really pick apart some of the Vancouver's east and west and downtown cores so that you know the winners and losers to help you with your decision making. As we dive into the numbers, and this is something that is quite important, the total number of properties currently listed for sale on the MLS system in Metro Vancouver is 13,600, a 46.3% increase compared to May of last year. This total is also up 19.9% above the 10-year seasonal average. So we're seeing a huge amount of volume across all categories coming to the marketplace. We've been seeing pretty much through all municipalities since December about a 5-month march upward in terms of active inventory, whereas the sales are pretty much staying flatline. So obviously with supply and demand, if we start to have this void in terms of what's available on the market compared to what is selling, it's going to start putting some downward pressure on pricing. And we're noticing in the marketplace, especially in the condo and townhouse markets, if you are not priced really well and sharply in terms of what the market perceives your property is worth, your property is going to sit. And the reason for that is if you go a little bit high, not even something that's grossly high, would not be inclined to put an offer. There's a lot more inventory coming up underneath you that is priced better, and those properties are selling quite quickly, usually in and around 2 weeks. So that's something definitely to keep in mind if you're a seller as well as a buyer. What I've been noticing boots on the ground is usually buyers were pretty niche where they're wanting to look, but I've noticed with some of the listings that I have had, they're willing to look at a much greater area, and there's not as much pressure for them to look at some of these properties. So the last 2 condos or a condo and townhouse that I sold, they took some time. The townhouse in Fairview took some time, but we did get a good price. It was a record-setting sale for that type of unit in the complex. They also sold one in Mount Pleasant. It was the second highest purchase in the building as well, even though we're in all-time high interest rates as well as a high inventory. But putting some deals together now is quite difficult. There's been a big pullback in the marketplace for the last couple months. So it's going to be interesting to see if we're going to get a jolt of buyer activity with buyers with this interest rate drop. But for myself, I think what's going to happen here is that July, the next policy rate announcement with the Bank of Canada, is going to be the litmus test what the market is going to do. If they do another drop, I believe we're going to be supercharged going into the fall market. But if they pull back and hold, I think we're going to be at status quo where it's going to be this soft underbelly for buyers. Right now, I think it's better to be a buyer than a seller, but we'll jump into some more of these numbers so you can take that into your due diligence. As we bring up the sales to active ratio numbers, which denotes what type of market we are in. Are we in a buyer's market, seller's market, balanced market? We can see that across Greater Vancouver for the attached, which is townhomes and duplexes, is sitting at 25%. So just in seller market conditions, as well as the apartment market sitting at 22.5 sales active ratio, which is also seller market conditions. So both of these arenas are producing better results than the detached market currently. Andrew Lees, who's an economist with the Greater Vancouver Realtor, states that with market trends now tilting back towards more balanced conditions as the number of new listings outpace the number of sales, we should expect to see slower price growth over the coming months. He continues, up until recently, prices were climbing modestly across all market segments, but with rising inventory levels and softening demand, buyers who've been waiting for an opportunity might have more luck this summer, even if borrowing costs remain elevated. And that goes to my point. I think there is really a nice soft underbelly here here for buyers to take advantage of the market. I'm not sure how long it's going to be until these interest rates start to inject some energy, but if you're a buyer, there's a lot of properties that are sitting on market, collecting days on market that you should be going after. As we bring the data on the screen, we're going to have 4 data points here. So the dark green here is for Greater Vancouver, the yellow is Fraser Valley, the light blue is Vancouver East, and the dark blue is Vancouver West. So we're going to start with the price point, and you can see that essentially ever since September, August of 22, for the last 2 years, coming up to 2 years, pricing has stayed pretty stagnant. We're right now in the apartment segment here. There hasn't been a lot of movement in the last 2 months in terms of price point. You can see here for condos, the Greater Vancouver average is $715,000, Fraser Valley at $532,000, Vancouver East $687,750, and Vancouver West sitting at $832,000 for your average benchmark price for a resale condo. So other than Vancouver West, which didn't have that much of a year-to-year gain, there's been some slow growth, but there hasn't been a lot of movement in pricing for the last couple of years for the condo market. If we continue on to days on market, and this is something that is something to keep in mind, you can see that between all 4 categories, Vancouver East, Vancouver West, Fraser Valley, Greater Vancouver, they're all selling within 2 weeks on average, which is very, very strong. You can see that obviously this is a trend line that goes back 5 years. But ever since coming into that 2022 realm, inventory is still moving at a rate that we can see here at within 2 week span, which is very, very good. Obviously, if you are a seller. When we look at sales, and this is something that I want to keep in mind as well, it's been pretty flatlined here. We had a little bit of an increase into 2021 to 2023, but we've always had a problem with the sales, and that's what has kept in pace. We've had low inventory, low sales, and that's what has been helping keeping the pricing high across those levels. But we haven't seen really a huge injection. As we jump into the numbers for Vancouver East and West after this, we'll show you a little bit more on a micro level what this stuff looks like. As we switch over to townhouses, quickly before we dive into the numbers, we can see that for the sales price, it's pretty much the same sort of dance as the condo market. It has stayed pretty stagnant over here since for the last 2 years. We've had a little bit of a run up, but as you can see on the right hand bar here, modest gains. Vancouver East actually has done very, very well year to year, a 9.8% increase in terms of their price points year over year. Vancouver West 5.6%, and then the Fraser Valley, you are outperforming the Fraser Valley, which you should expect. And Vancouver East is performing a little bit better than Greater Vancouver as a whole. And as we move on to days on market, it's going to be something similar here, all within 10 to 11 days. And that just speaks to the sales to active ratio being in seller market conditions, that the average days on market is quite low here for Vancouver East and Vancouver's West side. When we go to sales, again, a big flat line here for Vancouver East and West. There hasn't been a huge uptick, and we've already talked about how there has been a decrease in terms of sales over the last little bit. As we get into the winners and losers, where you should focus your time and energy, we're going to start with the downtown core. And it was hard to see on that graph because it's a 5-year trend line. But when we get here a little bit more of a micro level, you can see that since December, and this is going to be, I'm going to sound like a broken record, 5 months of continued growth with active inventory where sales have stayed, quite flatlined, and there's starting to be a divide here since December. Pricing has stayed pretty much flat over the last 13 years. Keep in mind when we're looking at these advanced stats, this is for both condos and townhomes, but we can kind of piece things together in terms of what their price points are. But we just did a quick run through between the condo and townhouse market with price points, but now we can get into certain sub areas and certain price bands. So on average, in the downtown core, balanced market conditions, sitting at 15% sales ratio, and homes are selling on average 2% below list price. Buyers' best bets, homes under $5 million, Yellowtown and minimum 4-bedroom properties, and sellers' best bets, selling homes in the West End and up to 1-bedroom properties. So, if you look by sub areas of the downtown core, the West End is just in seller market conditions at 23%. The remaining areas are in, balanced market conditions. Yale Town trending into buyer market conditions, but pretty even overall. When we look in price bands, obviously in these lower tiers from 5 to 700,000, you're in seller market conditions. But as you get above that $700,000, you start to drop into those balanced market conditions. If you're looking for some opportunities as a buyer, that $1.25 to $1.5 million range is sitting at an 8% sales ratio, and then 1.75 to 2 million is at 9%, and then anything above that 3.5 million to 4.5 million, you are also getting some relief in terms of a bunch of inventory, no sales, and you might be able to get some deals there. When it comes to sellers, there's nothing that really jumps off the page here. Everything is just into balance, maybe seller market conditions. If you're selling in that 6 to 700,000 range at 27%, that's a pretty nice sweet spot as a seller. You are in seller market conditions. As we get into Vancouver's east side, we're going to start again with the red dotted line, which is the inventory. Starting at 325 in December, now we're at 644. So we're almost doubling the amount of inventory in the last 5 months. Sales have been doing a little bit better, but you can see that there's a pretty big divide here, and the divide is getting a little bit larger. When we talk about pricing, it's stayed pretty stagnant over the last 13 months. Keep in mind, like I said, this is for condos and townhomes, the average pricing. We know that at 28% sales to active ratio, we're in seller market conditions, and homes are selling on average on the attached market on Vancouver's east side 100% of list price. Most active price band between 8 to 900,000 or 1 million to 1.5 million. 35% sales to active ratio, so very strong seller market conditions. In that 8 to 900,000 mark, you're looking at an apartment 1 mil to 1.5. You're starting to get into like townhome options or 2 to 3 bedroom condos as well. So there's a strong market there. Buyers' best bets in that 1.75 to $2 million mark in downtown Killarney, South Vancouver, Victoria, and sellers' best bets selling homes in Champlain Heights, Hastings, Maine, and minimum of 4 bedrooms. So obviously with a minimum of 4 bedroom, that's going to be a duplex or a townhouse. As we get into the price band here, and what I really like about these advanced stats is that you can really break things down, as I notice my lights burning out there, regarding where you should operate if you're a buyer and a seller. So case in point here, between 8 to 900,000, you're sitting at a 35% sales ratio, which is heavy seller market conditions. But if you jump and operate in that 900,000 to 1 million mark, it drops down to balanced market conditions at 16%. So this is very helpful when it comes to whether you're a buyer or a seller, to help you with your decision making. Then if you jump into that 1 million to 1.25, you're up back to that 35% ratio all the way up to 1.5 million. So you can see there's this significant sweet spot here between 900,000 and a million. So that's going to be a 2-bedroom apartment around Vancouver, but there's a lot of options at 62 with just 10 sales. So that's something that I would be looking at. 1.5 to 1.75 is soft here at 13% as well. So there's definitely some options depending on what you are looking for. In terms of bedrooms, they're all pretty much the same. All seller market conditions pretty even. Doesn't really matter what you are looking at. And finally, as we move into Vancouver's west side, again, 5 straight months of active inventory, 547 in December, all the way up to 940. So getting up to doubling of that inventory, and the sales again are not keeping pace. Pricing, not a lot of change over the past 13 months. And on the west side, it's also just in seller market conditions at 23% sales ratio, with homes are selling on average 1% below list price. Most active price band between 7 to 800,000 at 55% sales ratio, so very strong seller market conditions in that apartment space. Buyers' best bets, homes between 1.75 million to 2 million in Marpole, Oak Ridge, Southwest Marine, South Cambie, 4+ bedrooms, and then sellers' best bets selling homes in Fairview, Kits, and up to 1-bedroom properties. So if we look at the communities to see where some of the winners and losers are, we highlighted Kits at 58%. No surprise there, very competitive market. Fairview 40%. And then as we make it down, Point Grey's at 50%, for if you are looking to sell. If you're a buyer, some places to look at, South Cambie at 8%, Marpole 7%. Marpole, there's not much going on there, but South Cambie, there's nice pockets in there as well. And then Oak Ridge, 5%, but you got a ton of construction that's going to be going on there for the next couple of years. As we get into price bands here, anything from 500,000 to 1.5 million, you are in seller market conditions, and then it starts to drop in terms of competition above that $1.5 million mark on Vancouver's west side for condos and townhomes and duplexes of the such. 1.75 million to 2.25 million at 5 and 8%. So there'll be some opportunity, and there's a lot of inventory in that 1.75 to $2 million mark. So depending where you pair that pricing, if you're looking at that 5% price band in a 6% Southwest Marine area or a 5% Oak Ridge area, there could be some good options for you for acquisition. The story that I want to lay out is, nothing is straight as an arrow, and case in point, we look at some of the numbers here, days on market for Vancouver's west side. So I'm going to use a real life example here. Days on market 8 on average. We look at a Fairview property, 40% sales to active ratio, 1 bedroom, 31%, and then the price band between 8 and 9, 25%. So I was seller market conditions in a townhome of mine in all of these 3 areas. But it still took 3 months to sell the property. So my seller had to be patient. She did get a good price. It was a record-setting sale. But it's good for sellers to understand that even if all the data looks good, you cannot predict the marketplace, and you never know where buyers are going to be. And the real estate market can change very, very quickly as well. As we wrap everything up here, as I mentioned right off the top, I think the rate announcement is great. But keep in mind that the rate reduction is only for variable rate holders or people who are wanting to get into the variable rate space. The savings right now, and I've had pushback, from sellers, well, when the rates drop, isn't that going to be an influx of money coming into the marketplace for buyers? And not necessarily, because for a rough calculation, for every $100,000 of lending, you're getting a $13 of savings, right? So if you have $1 million mortgage, you're only saving $130 a month. So that's not a huge amount of money for someone to all of a sudden say, hey, I'm going to buy your overpriced property because I'm saving $130 a month. It's going to take multiple of these rate drops. In July, at the end of July, if they drop it another 25 basis points, that 130 starts to turn into 260. And if they stay on their schedule for December, it starts to add up. But these rate reductions are going to take a couple years. One of my previous videos that I did on the rate announcement, I go over the history and what to expect from Canada and the Bank of Canada, how they go about reducing rates, how long it takes. Like we're talking about a couple years here to really see some significant drops in price points and giving people relief and giving buyers options. So I think, at the end of July is really going to give us an idea of where we're going to be headed for the spring market. But it's going to be interesting to see over the next couple of weeks as we talk to mortgage brokers, are there more pre-approvals coming in? I have been talking to buyers myself, telling them to get into something now because I think there's going to be an opportunity here for the next month or two to get some good deals on pricing. But when we get some significant drops in rates, when we get confidence in the marketplace from buyers, that is what's going to make some changes in terms of heating up the market and pushing some upward pressure on pricing. It's not necessarily the rates. We know that even when rates have been so high for the last couple years, pricing has not dipped at all. There's been some steady increasing in pricing over that time. We didn't see a 30 or 40% correction. We didn't see that through COVID, but we know that buyers want and sellers want security with what's going on in the economy, with what's going on in the country, as well as the rate. So there's a lot of things going on here. There's new federal initiatives, there's provincial and municipal initiatives. We have an election year down south. We have an election year for ourselves next year. So there's so many things, and these all affect the real estate market, but we can only judge things, a week at a time. So we'll start with all this data, and then I will report to you next month what we're seeing on the ground. So thanks for watching. My name is Kyle Mark, your Vancouver realtor, and whether you're looking to buy, sell, invest, or relocate to my beautiful city of Vancouver, make sure you book that strategy call with me in the description below. Check out the video about the interest rate drops and what Canada is going to do or projected to do over the next couple years. Thank you.